Welcome to AI in 8 minutes or less, your daily AI update. I am so thrilled to have you here today because, let me tell you, we are setting a brisk, high-octane pace. We've got a massive briefing that covers the entire AI stack. We're talking explosive big tech earnings, shifting geopolitical sands, and even deep philosophical questions about AGI. We are going to break down the news that actually matters, so let's jump right in.
To anchor our story today, let's look at a truly staggering number. Alphabet just reported $109.9 billion in quarterly revenue. That's a massive 22% year-over-year growth, pulling in over $62 billion in profit. But, the real story here is the why. This unprecedented growth is being driven almost entirely by their AI ecosystem. It's a huge signal to us all that AI isn't just some experimental side project anymore. It is literally the core financial engine of big tech.
Section 1. Google's AI economic boom.
Google Cloud alone just hit an incredible $20 billion in revenue, rocking an explosive 63% growth rate. They are basically blowing past the competition by turning their compute infrastructure into a highly lucrative utility. Every single time they pour money into AI, it instantly turns into revenue and profit. Now, their legacy search engine is still holding strong, sure, but cloud infrastructure, that's where this explosive AI tailwind is really paying off. Section 2. The geopolitics of AI. So because of all of this economic power, we are now navigating a totally new geopolitical reality. First up, the White House is proposing a process to vet frontier models before they're even released. That really highlights the tension we're seeing between rapid open market innovation and national security. Meanwhile, the Pentagon just partnered with 7 major AI labs for military applications. And on the international stage, China actually blocked Meta's $2.5 billion acquisition of the AI startup Manus, unwinding the whole deal even after employees and payouts were already settled. The big takeaway here is that the global landscape has shifted. AI talent and capabilities are now viewed as sovereign national security assets. That friction between national security and tech expansion is absolutely an undeniable reality of the market right now.
Section 3. The insatiable compute crunch.
What's driving all this friction? Well, it's compute. There's an infinite appetite for it, and right now we are watching a massive geographic wealth transfer happen in real time. A staggering 67% of planned U.S. data centers are actually migrating away from your typical urban tech hubs, going straight into rural farmlands heavily concentrated in the American South. The sheer physical demands of the AI boom mean tech is quietly packing its bags and moving to places with open land and raw power.
And honestly, the industry is going to extreme lengths to secure that power and cooling. Beyond those rural farmlands, we're seeing major investments in deep ocean data centers. Like Peter Thiel is backing a company that uses wave-powered buoys. And if that wasn't wild enough for you, companies like StarCloud are raising billions to put solar-powered data centers into orbital space. Seriously, when an insatiable appetite for compute meets earthly constraints, the solutions literally leave the planet.
Section 4. OpenAI's shifting strategy.
Because of this intense compute constraint, we're seeing OpenAI execute a massive strategic pivot. In the past, their strategy was completely consumer-first and exclusively tied to Microsoft Azure. But after missing their internal goal of hitting 1 billion weekly consumer users by the end of 2025 and dealing with intense compute starvation, reality has hit hard. They're now shifting toward a multi-cloud approach, partnering up with AWS and Oracle, and heavily doubling down on the high-value enterprise market. Now, despite all the chatter about them delaying their IPO to 2027 just to manage data center obligations, their tech is absolutely still accelerating. In fact, there's a massive industry secret quietly circulating right now. OpenAI's newly available GPT 5.5 is matching the absolute state-of-the-art capabilities of models like Mythos on cybersecurity benchmarks. But here's the kicker. They're doing it at a fraction of the cost, 5 times cheaper, to be exact. It's a total game changer that's kind of flying under the radar.
Section 5. Enterprise AI and private equity.
Private equity is rapidly emerging as the ultimate deployment channel for AI. Just look at the numbers. OpenAI established a $10 billion venture with PE firms like TPG and Brookfield. Meanwhile, Anthropic launched a $1.5 billion venture with Blackstone and Goldman Sachs. The strategy here is crystal clear, folks. They want to use billions in private equity to force AI adoption top-down into thousands of legacy portfolio companies. It basically bulldozes right through internal corporate resistance, aiming for massive, brute force efficiency gains.
And to service that massive enterprise transition, specialized AI startups are absolute booming. Take Blitzy, for example.
They're an autonomous software development platform focused on large-scale enterprise code refactoring, and they just raised a mind-blowing $200 million at a $1.4 billion valuation. This perfectly illustrates just how lucrative the enterprise transition layer has really become. Seriously, if you're building tools to drag the legacy economy kicking and screaming into the AI age, the capital is waiting for you.
Section 6. AGI and Our Future.
Now, there's a startling prediction emerging directly from within the industry. Jack Clark over at Anthropic recently estimated that there is a 60% chance we'll cross the threshold of AI recursive self-improvement by the end of 2028. Let that sink in for a second. That means AI models writing the code and designing the architecture for the next, vastly smarter generation of AI models entirely without human intervention. The timeline to AGI, or artificial general intelligence, is compressing so incredibly fast.
As these systems get more complex and agentic, the deep philosophical debates are really intensifying. Evolutionary biologist Richard Dawkins, when talking about the Claude model, actually said, if these machines aren't conscious, what more could it possibly take? Whether these models are just mimicking human logic incredibly well or actually brushing up against true consciousness, well, it really highlights the deeply profound moment we've reached in human history.
So how do we, as a society, adapt to all this? Well, the social contract itself is evolving. Sam Altman actually recently pivoted away from traditional universal basic income. His 3-year study showed that cash stipends didn't really broadly improve healthcare access. Instead, the focus is shifting toward universal basic compute. Think of it like giving citizens a direct equity stake in the nation's AI, productivity, and compute infrastructure, kind of like what the Alaska Permanent Fund does for oil. It's a huge structural shift.
And as our economy fundamentally rewires itself, the risk models are completely changing. Legacy insurers like Berkshire and Chubb are actually dropping their AI risk coverage. The dangers, like IP violations and deepfakes, are just too unquantifiable for them right now. But that has opened up a massive entrepreneurial vacuum. The specialized AI insurance market is projected to skyrocket from just $40 million today to a staggering $5 billion by 2032. Actuaries and insurance requirements might honestly become the absolute strongest guardrails we have for keeping AI aligned.
All of this leaves us with a pretty provocative question to ponder. As this economic singularity approaches, will you let AI disrupt you, or will you use it to disrupt your industry? The tools are right there. The compute is being built, and enterprise adoption is already happening. The next move is entirely yours. If you enjoyed this, subscribe to AI in 8 minutes and never miss what matters.